Hi, everyone. Welcome to today's live session hosted by Ocrolus. I'm Rana Meyer. I'm your host for today's discussion on simplifying underwriting with a Docs Plus digital approach. At any point during this conversation, feel free to just use the Q&A box down at the bottom of the Zoom there, and we'll address as many as possible during the Q&A segment at the end. So now we'll kick it over to our esteemed speakers. They'll introduce a little bit about themselves and their organizations, and we can get going. David and Eric, take it away.
All right. Thanks a lot, Rana, and thank you to everyone for joining. It's great to be here together in person in the Ocrolus office. Speaking to everyone here, I thought we would do a quick introduction. So, Eric, do you want to kick us off?
Of course, yeah. Nice to meet you, everyone. My name is Eric. I work at Flinks. Flinks basically means financial links. And I'm a product manager there. So basically, I've been working with the team at Ocrolus for about 2 years, and I've been running different initiatives like our document upload product, leading Flinks Connect, etc. And really, in essence, what Flinks does is we allow people to link their bank accounts, for those who don't know, and get access to financial services, so that you, as a financial service provider or lender or bank, can basically get that data and use that for your underwriting. So we provide that type of data, as well as kind of enriching that data. And before I was at Flinks, I was actually working in Europe for one of the largest open banking platform in Europe. So kind of taking some of those learnings also to Canada.
Oh. Very cool. And they all tend to rhyme for whatever reason. Thanks, Flink.
They do.
All right, everyone. I'm David Snitkof. I work at Ocrolus. Ocrolus is the leading AI data and analytics platform for lenders, for consumer lenders, for mortgage lenders, for small business lenders. And we work with over 400 lenders to help them make higher quality decisions with trusted data and unparalleled efficiency. I've been with the company for about 4.5 years, have had the pleasure of working with our clients and our partners all over the US and around the world. We have a great partnership with Flinks, and as I think you'll see today, there's a lot of really great stuff that we've built already, and we've gained a lot of insights by working with our mutual clients to help them adopt document plus digital workflows to make the best lending decisions while also offering the best customer experience to borrowers. All right, so now I think we're going to do a poll. Yeah. Rana, will you put that poll up on the screen for people? Do we take bets on what the most people are? What's going to be the plurality of results?
My bet will be B, non-bank lender.
I'm going to bet on that too, non-bank lender. And MCA is similar to a non-bank lender, although not technically a lender from a legal perspective. So it'll be interesting to see what people choose.
Yeah, you guys were pretty on par there. 54% with non-bank lenders.
All right, that's great. And non-bank lenders are very interesting institutions because now many of them are working with partner banks to do their lending, but particularly when you're a non-bank lender, you may not have the deposit relationship with your client. And a lot, of course, of what we talk about all the time is if you don't have the deposit relationship with your borrower, with your applicant, how do you get banking data, cash flow data to make sure that you have a really clear and precise picture of a borrower's financial health? And so, as we look at these numbers that we just put up on the screen, I think both of our organizations have had experience, some of this is just over the past year, dealing with just an incredible amount of customer data. So do you want to walk us through just, how does Flinks work and calibrate some of the numbers for us?
Yeah, I can share some of the highlights here on the numbers. So today, every month, over 1 million people actually are connecting their bank account and linking their bank account across North America. So that's both in the US and Canada. And some other interesting statistics is that since we launched this partnership of not only connecting bank accounts, but also combining that with documents, is that for those customers that have used that with us, they've seen over a 50% increase in their application volume from that. And we've also seen great success from this partnership. In the past year or so, we have grown 4x with this Docs Plus digital approach. So we see a big kind of pull in the market from this and kind of refine the product throughout these years.
And what is so interesting about Docs Plus digital as you get to some of the Ocrolus numbers is we saw about 7 million applications for credit in 2024 alone, which is 133 million pages. And it's very funny because I've been in fintech for a long time, you've been in fintech for a long time, and open banking, and there is some assumption that all data can be provided digitally over these open banking connections. And the reality is we are still very much in a hybrid world. And in fact, we processed this 133 million pages of financial documents last year across these applications, which is a very large number and usually surprising when I share that stat with people. What's so interesting is in the United States, we are in an environment with an incredible number of banks and credit unions and other institutions. We process bank statements from 7,600 unique banks in the past year, which is also pretty astounding. And our volume, just like your volume, has increased a lot, almost doubling volume last year versus the year before. I think we talked a little bit about some of these challenges, but let's talk to our audience about just why even try combining docs and digital? Why aren't these separate things? Why do they make a lot of sense together?
Maybe to the first point there, I can talk a little bit about that one. So I think probably not news to anyone in this audience, but even though for Flinks, for example, we're connecting 1 million bank accounts, every month, but that doesn't mean that everyone wants to connect. Your customer group looks very different. There can be reasons for a bank being down. We're not at a full open banking system yet, or a system yet, especially in the US and Canada. I think there is that need for different options. So that's kind of what we've seen. And that's one of the challenges with what most of our clients are coming to us around is like, how can we get more of our applicants through the door and through the funnel? Basically, that's one of the main challenges that we keep hearing.
Yeah, and I think a lot also has to do with acquisition channels. So in certain direct to borrower acquisition channels, you can often get a borrower to connect digitally. In a broker-based channel, which happens very frequently in small business and in mortgage lending, it's very often a broker collecting all the data, collecting all the documents, and then submitting to lenders on behalf of the borrower. And sometimes that actually lends itself to a document-driven process or a process that has some documents in it. And I think, we are living now in a golden age of customer experience where consumers have so much choice and they want to engage with the lenders, with the service providers, with the platform that gives them that flexibility. If you can connect digitally, that's great. If you want to provide docs, that's great. Regardless of what institution you work with, people will demand that really high quality experience.
I couldn't agree more on that. No. Yeah, I think this is a good example actually for when we're talking about, it's not only related to a bank connection being down or for whatever reason. I think part of it is also around what you see here. We've seen we can see as high as numbers as 20% of people are putting in their wrong credentials. So they might want to connect, but they have forgotten them, or there's different reasons for why they might drop off. But today, in today's ecosystem, it is very much rigid to try to force everyone down one path. So that's kind of the problem that we've been working on together. And I think that's also part of what we saw as Ocrolus as a good partner, is that we can take both data points and kind of output the same results regardless of kind of the method. So here you can see some examples of how to try to capture the user for whatever reason or error that might occur. Maybe they're standing too still for long on a kind of inactive on a screen, or maybe they failed their login process for whatever reason, right? This is one of the common problems that we're trying to address with this partnership that we kind of see a very good success with. And if you go, I think maybe we can talk about this slide. So I think this is maybe even more important than just providing a sort of a fallback method. It's actually, like you say, giving that choice to users. So here you can see part of the flow that we've designed, where we're giving that choice to the user. So, you select your bank, you can select the connection method that you want. And we try to work with our clients a lot to try to customize this. How many bank statements do you want to collect for your underwriting? How can you make sure that process is as smooth as possible? And also on the back end, kind of touches on this is, how can we make sure it protects against fraud, etc. So having all of that available into one user experience has been really kind of key, making it as smooth as possible. So you can see here kind of the example of how that can be done and customized and so on.
Yeah, and it's a really nice, smooth, and also quick experience. And so there's the customer experience for the borrower connecting or providing their docs, which is really good.
Yeah.
There's also the great benefit for the lender
Yeah.
of one, reducing drop off and getting
Yeah.
throughput and ROI through their funnel, but there's also the standardization of data.
Yeah.
Because if you imagine there's the data coming from open banking directly from the banks, that's in a certain format.
Yeah.
Then there's also the data coming from 7,600 different institutions,
Yeah.
which needs to be normalized
Yeah.
into the same schema so that for the lender, regardless of how they're getting the data, document or digital, it's always in a reliable, trusted, standardized format so they can do the cash flow analysis, income calculation, everything needed for underwriting.
Exactly.
So this is kind of a discussion. I think we are at the still early stages of open banking, certainly in the United States, and knowing even the implementation timelines for open banking, this is going to take years. And the fragmentation of the market and the number of service providers, even some of the CFPB guidelines that came out last fall, the deadline for the smallest banks was in 2030. And we don't even know exactly how that's going to materialize now. So I think we'll be in this hybrid world for a very long time.
Yes.
How do you see this? I think we have a pretty good idea of large banks, and I think large banks have a good embrace of open banking. How do you see this working with smaller banks?
Yeah, I think it's very interesting. Actually, like I mentioned, I'm from Europe. So as you know, PSD2 was the kind of regulation that pushed open banking in Europe back then. And that happened in 2019, as I recall it. And I would say still to this day, the majority of the connections or like the open banking landscape you see in Europe is still not through open banking. You still have this dual ship where you're having direct screen scraping connections and open banking. It's still and documentation and documents. So we kind of seen its same kind of structure there. So I don't think I think it's going to follow a similar path. You think that regulation causes the whole market to shift in a day, but actually that whole shift takes years, and it's kind of evolving through that. And I think, like you say, smaller banks, smaller credit unions, they might not take the lead. There will be some that are very fast and kind of. We are also trying to spearhead open banking, working with different financial institutions to share their data, but it does take time and it needs to be standardized, it needs to have proper APIs and so on. And just add to that is actually, I think a lot of the focus on open banking is around standardization of APIs, having a standard FDX format or whatever it might be. But from my experience, it's actually somewhat gets lost in this. Is actually customer experience. Like, does the authentication journey, is it easier than it was before? If it's not, what's the benefit with open banking for consumers? So I think that's also part of the discussions that need to happen when you're building out those things.
Do you think that different types of borrowers, consumer borrowers, business borrowers, have different user experience preferences in an application process like this?
Definitely. I would definitely agree. I mean, there's different kind of maturity around automation and how fast you want to do your underwriting process. I mean, we have customers from consumer lenders to business lender, mortgage lenders, etc. And everyone is on a different journey, kind of on the automation there, and they have different prerequisites to kind of, get faster turnaround times, which we hear a lot about, or getting a better customer experience. But they all want the same thing, and some consumer lenders are really out there, super digital, and it's about speed and just making a quick decision, while some taking the steps towards more automation in the business lending space. And I think, especially in the business lending space, we also see a lot of, adoption of the hybrid approach, where you don't want to take the step all the way to digital because it's too big of a step, and you're kind of, it doesn't really fly with your customer base.
I think another interesting thing about customer experience here in an application process is it's not just about making the customer happy, which is of course very important, but it's also about getting the best customers. And there is a selection effect to having a smooth and fast application process, because if a borrower, a business borrower, a consumer has to go through an onerous application and it takes long to get a turnaround time, there's a lot of errors, a lot of back and forth, the best customers will go to the institution that offers them the best, smoothest customer experience. And then if you're not that, you will be left with the lowest quality borrowers who don't have another choice. So it ends up not just being customer experience thing, it ends up actually being a risk management asset to have a really good onboarding experience.
I would definitely agree with that.
What do you think of, agent-based underwriting workflows. I think it's a very, very, very nascent thing.
Yes,
and most people haven't thought about it yet, but
yeah.
there's a very strong argument to be made for that playing a big role in the future.
Yeah, I mean, you can't really talk, I guess, about the future of lending without talking about a bit about AI. And in my perspective, like you've been working with kind of machine learning AI throughout, many years, and I think it's part of that automation journey. I mean, if it helps you automate, a certain percentage of your application volume by doing agent-based underwriting or having more automated process, of course, that's one trend I think we're definitely going to see. We're also going to see more, like you say, it just makes it easier to take unstructured data and turn it into a structured way or make, real decision based on it. So yeah, I think that's kind of what we're going to see in the future. I don't know, what do you think?
Yeah, I mean, first, AI in general, we founded Ocrolus this as a great boon to our technology and our business, because if you think about it, we're dealing with very heterogeneous, unstructured or semi-structured data. And again, like the stat we put up before, you have bank statements from 7,600 institutions. They're all a different format. Sometimes they're digital statements with a very nice quality. Sometimes it's a terrible cell phone photo with a shadow on it and a coffee stain or something like that. And the variety of different processing methodologies needed to get perfect quality data off these statements. And by the way, that's just bank statements, not just talking about the 1,600 other different document types we support. What has been great for us is being able to take all of the best technology. So off-the-shelf OCR technologies, closed source LLMs, open source LLMs, our own models that we've trained off of our training data, those 133 million pages a year of training data, and then also fine-tuned version of those models, models that we've been able to fine-tune with our data, and say, okay, let's put this through some sort of calibration, a calibration that we've developed to say, what is the right technology to use on every document, on every field, to make sure that we're able to get a high degree of accuracy very quickly and in a very cost-effective way. And so for us, AI has been incredibly helpful, and we've been doing that essentially even before the modern, the past 2 years era of LLMs. We've been using a lot of these models for a long time, and that's only accelerated. I think over the next year or 2 or 3 or however long, we'll start to see AI agent workflows come from the back end into the customer experience. Where the interesting thing about lending, and particularly business lending, where we spend a lot of time, is businesses are fundamentally idiosyncratic. And consumers have some commonalities. Businesses, there's so many different industries, so many different operating models, so many different financial conditions or needs for capital for a business, that there will be exceptions in different workflows. And I think for a business owner to be able to go through that journey and that customer experience, having, agents or other technologies that can react to the unique personalized needs of the business is really important. And then to work through an experience like what we built together, where to resolve something, you might have a digital data source, you might have a document-based data source, but either way, we're able to get through the process.
Do you think it will look like someone that's submitting maybe something is wrong, or maybe, it's too thin, that actually having that real-time feedback of, hey, this is missing, can you add this type of interaction maybe in the future as well for like this type of AI?
I think that's very possible, as long as it doesn't put too much on the bar. I think that's the hard part, where I don't fundamentally think people want to be chatting all the time. I don't know if chat is the right, chat is the dominant interface in LLMs today, but that doesn't mean maybe chat is like the command line. But we still don't have the GUI.
No, I would agree with that. I think it's understanding the nuances of that specific business. Like we have customers that are underwriting a dentist, they might get their income from insurance deposits. So they look different. Their business model looks different from another type of restaurant. And so understanding those nuances and kind of the context of the small business to make even more tailored things, I think that will also help a lot. Like the enrichment layer portion of it.
Exactly. And as the data becomes more available, the underlying data, what really is important is the insight about the business, the consumer, the income of the consumer. And you mentioned small business. I think this also is relevant in an industry like mortgage, where as people are applying for mortgage loans, there's so many different types of people and occupations and types of income and types of mortgages and in all different states, where the ability to say, all right, to calculate this type of mortgage, I need these 10 documents and these 30 fields, and we're going to calculate it in all these different ways. And it's very much personalized towards that state, but of course the borrower doesn't want to feel like it's an overly bespoke process. They want to feel like it's just streamlined.
Awesome. David, Eric, thank you guys so much for the great discussion. I want to shift, if it's okay with you guys, to some Q&A. We had a couple things come in. One a little bit more technical. Maybe Eric, I'll give to you just based on the UX that we had up on a couple slides, and then some great questions around the use of AI. So I will start with one regarding the UX we just spoke to on the previous slides there. So the drag and drop feature, is that something you're able to do on your phone?
Yeah, so we can actually build it flexible. So that's just to demonstrate, like usually you use drag and drop on, it's more type of workflow on desktop. But on your phone, what happens is it's built in whatever type of medium that you want to share. So if that is taking a photo of the actual statement or selecting from your library or from your files. So when you click that, you're able to do that. So that's typically how the workflow looks like on mobile versus desktop. But it adapts to whatever medium, basically. That's also very important, to adapt to whatever medium that the user is on.
Thank you. I'll give this to both of you. Maybe I'll start with you, David. So from Carla, I have, how can AI be used to automate or verify the validity of loan documents received, so particularly being able to quickly identify fraudulent documents?
Yes, so fraud is an unfortunate reality of lending. When you're in the business of making capital available, someone will try to steal that. So, and the thing about AI is it's both friend and foe, right? Some AI tools make it easier for fraudsters to falsify their identities, to falsify documents, to create a story, to deepfake, whatever. AI tools need to also be used to detect and combat that fraud. What we do in our product, we have something called Detect, a capability we have, where we're able to use all the data we've gathered and the way of understanding these documents to dig deep into the guts of the file and uncover edits that would have been invisible to the naked eye. And so sometimes we see on a bank statement, you were asked for the last 3 months of bank statements, but the last 3 months weren't very good for you. So you gave last year's version of those 3 months and you just changed the year on every single date that showed up in the statement. We see people taking other people's bank statements and passing them off as their own and changing the PII. We see people obscuring the source of a deposit or a debit transaction or something like that. So we try to make that very clear, and we alert people when that comes in. We make it very visible in our UI so that a fraud analyst can go in and figure out what's actually happening and how do they need to handle the exception. And I just think fraud is an arms race. The fraudsters are working very hard to use AI for their use cases. We have to work very hard to use AI to protect our customers.
I would just add to that we are investing a lot into this as well. So not only we're trying to leverage what you guys give us in terms of detecting edits and so on, but you've probably also seen there's a kind of an increase in templated form, this type, where you can actually buy a template online and fill it out to try to detect these things, and then turning these kind of fraud signals into something that's useful as well. They can act upon, or maybe it's part about automating part of the process. So those that are very safe, maybe it's the 90% you can automate, and then you have more rigorous review on the 10% or so that shows up signals or have warnings. Right.
I will direct this to both of you actually, but it's a good question regarding the partnership. So if a client fails to connect to Flinks and submits PDF documents, does Flinks send those documents directly to Ocrolus, or how would these documents get digitized?
So in the backend, we're using Ocrolus as part of that process, and you're getting it through one API. So regardless if the user connects or if it goes to the Ocrolus, we're taking that data and pushing it through the same API. So you get that data regardless. But if the question is around if they do neither of those things, to that, I would say what we do and try to handle is that we create these event listeners as part of the UI to understand where the user dropped off and for whatever reason, so you can kind of work and engage that. And we also have a bunch of different type of error screens to kind of get the user back through that flow.
Yep.
That makes sense.
I have one more from the chat, and if I have a few more minutes, I might have another one to squeeze in from a backlog question. So David, the AI model calibration piece you spoke to was pretty interesting. Is that a new thing?
In some sense, it's always been going on. So our point of view at Ocrolus is that, and this has been for a long time, we're always going to use the best combination of off-the-shelf technologies and models that we can build in-house and automation techniques we can build in-house using all of our training data. I'd say that's become amped up over the past year and a half, just because of the incredible pace of innovation we've seen in AI. And we've built some pretty interesting internal technology so that anytime there is a new model, a technique, a new paper, we can very quickly take that technology, calibrate it against our history, calibrate it against our training data, and be able to analyze how accurate it is. Does it give us a boost? Does it not give us a boost? And how should we layer it into our system?
Wonderful. Thank you so much. So I'm going to throw up some slides really quick just to kind of wrap it up, take some key takeaways. If you could take that home, David, and then we will give everyone the rest of their afternoon back.
Yeah, thanks, Rana, and thanks everyone for being here. I think this has been a fun conversation. Thanks, Eric, for coming down. As we talked about, there's just the ability to process document and digital data in a seamless workflow for customers is great for customers. It gives them a high quality customer experience and the ability to get funding from their financial services providers faster in a nicer way. And for the lender, it helps them maximize the efficiency of their borrower acquisition funnel, provide a good experience, and through the standardization of data and analytics and fraud detection, also manage their risk a lot better.
Awesome. So that's all the time we have for today's session. Huge thank you again to David and Eric for sharing their expertise with us. And again, appreciate all of you guys joining and really appreciate the great questions as well. So as a reminder, we'll send out the recording within 24 hours here. If you have any additional questions, just feel free to reach out to us directly. You can definitely find David and Eric both on LinkedIn, and they'll both be more than happy to connect with you all one-to-one. Thanks again. We look forward to seeing you at our next session.
Thanks, everyone.
Thanks, everyone.